Hello everyone. In this video, I will debunk 7 myths or 7 false beliefs about financial investments. And I also will explain you how astrology can help you to understand and to time market cycles. Either if you're not still investing, or if you're an amateur investor, or if you're a professional investor, or even hedge fund manager, this view will introduce you a new perspective, a new tool about how you can manage better your financial investments. My name is João Medeiros. I'm a Portuguese astrologer for more than 20 years and with experience in financial astrology for the last 3 years with courses, with teachings, with research. And I will present you some conclusions and these 7 false beliefs, as I told you, and that are very common in many people. So in the end, I will explain how you can understand more, how you can study more about this material and about this tool. I will introduce you our course of financial astrology, where you can right away see in the website fineastrology.com if you're interested already in going and dive into these materials. You are very welcome. It is a great pleasure for me to introduce you these topics, and let me just remind what are these 7 false myths about financial investments. So the first one is that financial investments are very complicated to do in the operational sense, and that we should stay away from them. So they are difficult to do. Okay, this is one first common belief. The second common belief is that markets are very volatile and risky, and so we can lose a lot of money, so it is better to be out of the market. The third belief is that only professionals in this area, like hedge fund managers, can do it well, can invest well with consistent good results. We will see this is also false. Fourth myth, in the long run, markets or stocks are always going up, so we just have to be buying every year, every month, regardless of the price. This is a belief more common in people that do investments already for a long time. It makes a lot of sense, but the affirmation in itself it's wrong. We will see why. Fifth myth, that is impossible to time the markets accurately and to understand the market cycles. Sixth myth, no one has ever predicted very accurately and in great advance tops and bottoms for a certain year of a volatile market such as cryptocurrencies. And the 7 myths is that planetary cycles are uncorrelated to financial cycles, and so astrology is nonsense. So these are very common beliefs, and that make people run away from investments with a lot of fear. And even people that started investing and had bad experiences, they kind of reassure some of these beliefs. But as we can see, we will see one by one, they are not correct. And the opposite in most of them, probably it's the truth. So we can start with the first myth, is that it is very complicated in the practical sense to do investments. And so it's a difficult world. So I must tell you, let me just share the screen again, that this first myth, this first belief that investments are difficult to do is completely false. And the reason why it is completely false is that there are things in life operationally, in practical way, infinitely more difficult to do than investments. This is one of the reasons. For example, if you are a father or a mother, if you raise children, that is beyond more difficult of doing in the practical sense, managing and doing investments. Also, if you have some kind of discipline of working out and being fit, like going to the gym twice a week, 3 times a week, or having a hobby that you do with a lot of pleasure and consistently, that is more difficult to do than investing. For example, if you had already health problems and you overcame those problems, or if you are getting old and aging, the process of aging and, for example, losing people is or having health issues is beyond more difficult than managing and running and dealing with investments. So these are some reasons, but there are more reasons. And other very important reason and is that compared to the past, nowadays, because of technology, is much more easy to do an investment online or to do an investment with your phone. So in the past, you had to fill a lot of forms and sign a lot of forms with your bank, and you didn't know what was the price of the stock you bought without consulting some newspapers. And nowadays, in the practical way, it's the same thing investing as doing an online shopping. So if you ever bought something online, either shoes or a book or a ticket to a concert, that is the same thing as doing an investment online, operationally speaking. So if you ever ordered some food with Uber Eats or other platform or other app, if you ever order something else online, if you ever made a transfer, a bank transfer with your home banking, if you ever paid any bill with your home banking, that has the same difficulty as doing an investment online or doing an investment. So it's basically shopping online, investing. And ideally, we would want to buy cheap and sell expensive, or buy low and sell high. Okay, so in reality, financial investments are part of our life. Uh, there are many areas in your life that we should develop, but this is one of those areas more important and that has profound effects for the management of the other areas. For example, if you don't have money, you might feel stressed. If you don't have money, you might feel that you cannot protect your family. So for many reasons, this is one of the most important areas in terms of personal development, in terms of personal growth. And from my experience as an astrologer and coach, even people that had already a lot of money, they even them want still to have more financial freedom. So this is even spiritually a very important area of life, how to deal with money, how to manage money, how to be able to multiply money in different ways. And one of the ways of multiplying money is knowing how to manage investments. And this is more true with age. As you go old, you don't want to work so many hours. You want to spend more time with your loved ones. You don't have the same physical energy to be working all the time. And so it is increasingly more important when you grow older, when you get older, to know how to deal with investments. And the sooner you start, the better, because this is like any other activity. You need experience, and experience can lead to better results. Okay, so in reality, investing is making an online shopping nowadays, where ideally you would want to buy low and sell high at a high price. Okay, not you can buy one day and sell either 1 year, 3 years, 4 years, 5 years later, or even sooner, depending on your personal investor profile. But in any case, um, it's not difficult. It's very easy to do it in the practical sense. If you buy a book online, if you shop online, if you order your food from the supermarket and you make like a list, a bucket list of groceries for your house, that is has the same or more difficult to do that. It's more difficult to do that than to do an investment online. So However, people can ask, okay, John or João, but might be true. It is important to know how to, beyond working a lot, beyond being a slave, beyond working ourselves completely to exhaustion, we should have another way of multiplying the money. And the real thing is that you own companies that, when you buy stocks, for example, that are working, that are producing goods, that are selling services, and so they are having cash flow, they are increasing value to society, and you don't have to work all the time, but you can own companies that keep working, factories that keep producing, and with that, you also increase your patrimony and your money. Okay, so but the great question you might ask me is, John or João, can I how can I know if a certain price of an asset is high or low? That is a good point that you are making, but how do I know? Because this is the real deal. How do I know the price is high or low? First, you can just check the historical charts of that asset. For example, in Google, you can, in this case, research, for example, Tesla stock. You put Tesla stock or Tesla stock chart in the Google, and you can choose to see the chart for the last year or the last 5 years or the last 6 months or the last months or all time. And you have other engines where you can get to this information. And so by the fluctuation of price, you have an idea of the ups and lows compared to the past. Okay, this is one way of knowing. You also can research what some experts can say about the target price, or some investment banking or investment companies. Sometimes they post online what's the target price. And so we can gather 3 or 4 opinions of the target price for a certain stock, and you have an idea what the market thinks of the stock, what is the history of the price, and ideally you should know something about the company, about the business of the company. You should understand what is the value that the company adds in terms of their products and the quality of services to society. And if you believe it fulfills a need of society in the future, if you believe the quality of the products are good, if you believe the quality of management is good, then you have a candidate for an investment, for you to buy a stock for you to buy. Okay, so you also must understand that markets normally react emotionally to news, either if they are good news or if they are bad news. In the short term, people are emotional and they exaggerate the effects. They exaggerate in the short term. For example, if you have a news for an election or an earnings report that is out there, and is released, or if another political event happens with some significance or even some rumor, you can have a shift in the price. Okay, depends if the duration of the effect depends if it's a fact or it's a rumor, but normally on average the effect has a duration of about 1 month or 1 lunar month. It's the time of the sun crossing a whole sign, a zodiacal sign, or at the time of a new moon, which means a new emotion or a new narrative in the market. So these narratives, the emotional narrative of the market, are normally monthly or have 28 days on average of duration. So, for example, you can see here the case of Tesla. Around 4th of November, Tesla stock price was about $250. But when Trump was elected, and the day of the election, you see that because Trump was very connected to Musk, or Musk very connected to Tesla, and Musk is the CEO of Tesla, there was a big fear that if Trump didn't win, that Musk would be seriously in a bad state and could be like persecuted by the winners. And so it was a very good news for the Musk fans because he was very related to the new Trump administration. And so the market reacted with euphoria very positively. And in less than 1 month, the stock price increased almost doubled in value to almost 500 US dollars. Okay. So, however, some months, 2 months after that, the stocks were already around $400. And as you can see, when the tariffs were announced, there was a huge decrease in the value, Trump's tariffs, and for the price that was even lower than before the election. Okay, so of course there is volatility here. There is a lot of volatility, but you can see how two different news, election of Trump, tariffs of Trump, the effects that they had in the price of stocks. But then, more or less 1 month after this, we have the announcement of some deals, tariff deals. And so this was a good news for many companies and also for Tesla, which saw the price increase to $350 again. But then there was a kind of a conflict, a fight, an argument between Musk and Trump. Musk accused Trump of being on the Epstein files. And so it was like the markets also reacted negatively to that news. And until the announcement of the rate cut, more or less around that, and when the market felt that Elon Musk was committed to Tesla full time, is when the market started again to recover to the values around 45 $450. Okay. So there are many decisions, many announcements, many news that influence the fluctuation of price, interest rates decision, inflation data days, when of course wars begin or end, or when there are political events in some parts of the globe, or there are political decisions, elections, these types of political movement, of course, they influence the price, but it's important to understand that normally the market overreacts. And astrologically, we have also some other tools to understand when markets normally overreact. One of those tools is the retrograde planets. The retrograde planets. Normally, when planets are retrograde motion, and especially Venus, which is the rarest to be in retrograde motion, 45 days every 1.5 years, there is a new evaluation of the political economical situation, and normally prices tend to change a lot, but exaggerately during those months and a half. Okay, also when Mercury is in retrograde motion, and sometimes also Mars. Okay, so in these periods, and especially when they overlap, when they coincide, when they happen at the same time, for example, Venus and Mercury retrograde, which happened, for example, here around the tariffs announcement, normally the effect is even more powerful. So you know, from the astrological perspective, that the probability of an overreaction and an adjustment of the market is very real when we get closer to the retrogradation of planets. Normally for the downside, but sometimes for the upside. Depending on the type of retrogradation, the exaggeration can be for an upside. For example, here there was a peak of a retrogradation of Mars in retrograde motion. So so we have this idea, and we also know that most markets are correlated at the same time, and this is very important to know. This, for example, these political decisions or political announcements, they affected most of the financial markets at the same time. Okay, at the same time. So when Tesla was increasing, were also increasing many other companies, and for example, the crypto industry, the crypto currencies, and when the tariffs were announced, the most part of the market tanked of stocks and more high risk assets. Okay, so this is important to note that there is a financial climate. There is a financial climate in the world, a financial emotional climate that we can identify in advance by understanding astrology and the motions of the moon and the motions of the planets. When planets change sign, there is a change of emotion or narrative. When they collide with each other, there is a clash or some kind of crash or some kind of tension. And so there are different ideas and different correlations that you can find also if you have done already historical research. Okay, and so for example, in this course that I'll present in the end, I will show you what are the patterns for the different years, for example, with the 7-year cycle, for the 15-year cycle, and so on, based on research, and how we can understand the idea not only of a certain year, but of a certain month. Okay, so now we can go to the second common myth, which is people that say, well, markets are very volatile. We just have seen that this is true. For example, Tesla decreased and decreased almost 50% in 1 year. So imagine that you have all your money in Tesla stocks and you see your money fluctuating a lot, and you have to be very strong in your belief to manage with those kinds of volatility. So I'm not saying it's not volatile and risky. However, there is another part of the story. Another part of the story is that normally you have 2 or 3% inflation a year. So prices of goods and services increase at least 2 or 3% a year officially. Non-officially, because we know that sometimes there is some kind of um, falseness of the numbers, official numbers. Sometimes it's higher, the inflation, the real inflation. Okay. On the other hand, we know that the average return in terms of stocks is around 80% a year after inflation. For example, the S&P 500, which is the basket of the 500 most competitive American companies in the world, and normally returns 8% a year on average. Okay, some years, for example, last 2 years, return more than 20% a year. Okay, so they on average return 8% a year. We also know that there is another important effect here, which is the currency devaluation by the fact of governments printing each year more money and increasing their debt ceiling. So we are seeing, especially in the United States, an increasingly bigger value of debt and depreciation of the currency. Okay, so it's not the same thing to say that you have $1 million, depending on the amount of dollars that are circulating in the economy. So if they print a lot of money, your money depreciates, okay? The value of your asset. And what we are seeing sometimes is the prices of goods increasing a lot, not because of their real value, but because of their nominal value, because the currency where we price things is losing value. And so we see prices increasing also because of the value of the depreciation of the currency. Okay, so it's important to understand that there is real and hidden inflation, that there is currency devaluation. Some people estimate this devaluation in about 6 to 8% a year. So in reality, you can be losing around 10% a year if your money is stuck in the bank. Okay, in reality, your purchasing power can be decreasing on average 10% a year. Okay, so it is less risky. It is much less risky if you just buy companies, if you just own parts of those companies and that are producing services, that are doing businesses, that are increasing sales, and that are having profits, and you share those, they share those profits with you if you own those same companies. Okay, so they are also increasing their price of their assets. They are increasing their prices of their assets because they are coping with this depreciation of the currency. So it's better to have hard assets like assets, land, art, other goods, gold, or other hard stuff, or companies that have assets. Those assets will reflect the value of the currency, the value of the depreciation, so they will increase in value, and you can cope with those depreciation better if you have those hard assets and those companies in your own portfolio. Okay, so in reality, it is better to own companies by owning their stocks than just having money in the bank because of these problems of inflation and depreciation of currency. Okay, and because in reality the S&P 500 historically has been a very good performance, had very good performance in terms of return. Okay, you are owning the strongest companies in the world. When you buy, for example, indexes, you are owning the strongest and most competitive companies in the world. Okay, with a hard structure of businesses and a highly competitive nature and style. Okay, so let's go to the third myth, and the third myth tells us that only professionals in the area can do well and consistently investments. Only people that already know and studied a lot and researched a lot, like hedge fund managers that do this for a living, only them are able to have consistent and good returns. And you will see that this is also completely false. Okay, this is completely false. And if you read most of the books on investments, most of the books on investments will tell you the same thing. Okay, will tell you that it is very difficult for a hedge fund manager or for managers to consistently beat the index S&P 500, which already has in their composition the most competitive countries companies in the world. Okay, so it is not easy for a trader that is buying and selling stocks all the time with fees, and this professional, he also has fees to charge you when he runs your money. And so what happens is after fees, after what you have to pay to the bank, their management of portfolio is not normally, on average, better than an index that by itself it's optimized. So by itself, by definition, an index will leave out the companies that have bad results. They are recycled every 3 months or every month. So the companies with poorer results, they get out of the index, and other companies that have better results, they get in the index. And so the index by itself is optimized. And so it is a very good invention, the invention of the S&P 500. And you can buy ETFs, which are exchange trade funds, funds that replicate with low fees the S&P 500. And so you can have a passive management portfolio where you can have very good results without having a manager managing your money. Okay, of course there can be exceptions sometimes if you know a professional with good results, if you have a lot of trust, but normally either banks or hedge fund managers will not manage so much better as just putting your money in a ETF that replicates the S&P 500. Okay, that is what most of the investment books will tell you, and it's true. Okay, it's not easy to beat the market or beat the 500 strongest companies in the world. The risk is already diversified. and the excellence is already here integrated in this index. And there are some myths about geniuses of finance that people think. For example, there is a very famous movie called The Big Short that portrays Michael Burry, an investment manager that predicted the crash of 2008 and made a lot of money with that prediction. Because when you tell that you bet that the market will go down, you say that you short the market. Where when you bet that the market will go up, we say in terms of the terminology that we long the market. So he shorted the market. He made a big bet that the market would go down deeply, and it did in 2008. However, this manager has been predicting recessions ever since, has been predicting crashes like almost every 2 years. Okay, so he has been after this consistently wrong all the time. Okay, so people think, okay, he was right one time and made big money, but in reality, he was wrong most of the time after that. Even Ray Dalio, which is another legend in terms of investments, his own portfolio of his company that manages billions is underperforming the S&P 500 for the last 3 to 4 years, big time. Okay, so it's not true that these guys make it right all the time. They make it wrong many times, and even the legend of legends of investments, Warren Buffett, even Warren Buffett, considered the best investor of all time, in the last 3 years, he's accumulating cash, waiting for a crash. Um, and even if there is a crash next year or in the next 2 years, that could be a good strategy. But in any case, he has been losing already more than 50% of returns in the last 2 years when we compare to S&P 500. Okay, and his cash is also depreciating because of the depreciation of the dollar. Okay, but Warren Buffett has an incredible story that kind of shows the this that this strategy of having a passive fund is more effective that having an active manager, and he knew that, and so he made a bet with hedge fund managers of Wall Street that within 10 years, within a span of 10 years, if he would invest in a passive fund like an ETF that replicates the S&P 500, he would be better in those 10 years, who would have better performance than an active hedge fund manager. And he bet $1 million that he could beat any hedge fund manager. So there was one guy that put his hand up and said, I will do it. I will accept the challenge. He accepted the challenge. And what happened is that 3 to 4 years after this, the distance was so huge from the results of the S&P and the index and the fund related to it compared to the results of the active management, because you must remember that when you buy and sell, you're paying fees and taxes, okay, as well. That the difference was so great that the guy gave up and said, okay, you win. I'll give you $1 million and you proved your point. Okay, so in reality, if you just are buying a passive broad index fund, you could be performing better than most experts and professionals or bank consultants. This is the cruel truth that most people in the financial world don't want you to know. But in reality, most of the books, uh, most of them say this, that is extremely difficult to, in the long run, have a consistent better return uh, um, uh, of managing actively portfolios than, for example, just buying an index that is by definition optimized. Okay, so this is the real truth, is that sometimes it's easier and its simplicity is rewarded in the investment world. In the investment world, simplicity is rewarded. Okay, so sometimes the simple, the better. The simple, the better. Okay, so now we go to the fourth myth, and the fourth myth tells us it's a myth that is it's more common uh, in the people that in the minds of people that invests already for a long time. And this myth tells us that in the long term, stocks are always going up. So we just have to do what we call the dollar cost average, DCA, which is buying every month or every year consistently, because the markets are always going up. We will see that the idea is very good, but has um, a problem. And the problem is that, as we shall see, this is true in the long run in terms of 30-year span, but not in the shorter span. Not in the shorter span. Because as you can see historically, you have periods of 10 to 15 years of falls of the market. So for example, if you get in the market here around 1970 and you keep buying for 7 years in a row, you'll be losing money consistently. The same thing if you buy around the year 2000 until the year 2010, you would be losing money consistently. The same thing if you buy around 1935 until 1950, you would be consistently either stagnated or losing money. So as you see, there sometimes are cycles that endure of falling markets. So it is not an optimized strategy for the long run. Depends. It depends on the cycle. And here, astrology helps us a lot because there is a particular cycle of a particular planet that helps us understand that there are 15 years of expansion of the financial markets and another cycle of 15 years, more or less 15 years, it's a bit less, of contraction of the markets, where a cycle where, for example, there is more political instability in the world. Okay, this is a cycle where most wars tend to happen. It's the cycle of what I call the basic needs cycle. And the basic needs cycle rewards hard assets, things like gold, energy, houses, extreme good technology, um, bonds sometimes. So it rewards more conservative assets, okay? Commodities, and they don't reward so much high risk, highly speculative assets. And what is happening right now, that we are changing, we ended the social needs cycle and we are starting the basic needs cycle of 15 years. So if you do dollar cost average from 2025 or 2026 for the next 5 years or the next 10 years, it is very likely that you could lose money, okay? In terms of buying normal stocks and even the S&P 500, okay? So there could be other good strategies better. So it's important to understand that this strategy is good, but not now or not in the coming years in principle, okay? Because of the inversion of the cycle, okay? And what is the planet that shows us this inversion of the cycle? I will tell you in the course of financial astrology, okay? So the myth number 5 is when people say that it's impossible to time the markets. There is no tool, effective tool to time the markets. So it's not easy to understand the market cycles. And as you can see, there are many tools in astrology that helps us to understand that, for example, there are patterns that repeat, for example, every 7 years. And amongst the many tools that we have one tool in financial astrology, which is called the ruler of the year tool. And this rule tells us that there are common themes in the world every 7 years. They tend to repeat. And when we say common themes that tend to repeat, we are telling that there are similar things that tend to happen and similar economic environments that happens in the same years. For example, 2018 was a Mercury year, and we had the trade war of Trump with China. 7 years after that, 2025, we have another trade war. Okay, so this is a simple example of how this economic environment can repeat itself. And one of the most common years of bad results, typically, it's the year of Mars. So in years of Mars, which is a planet correlated to tension and conflicts and war, normally there is a decrease and destruction of value in the markets. Okay, so if you get in the markets some moments before the start of the year of Mars, or even in the middle of the year of Mars, but especially in the beginning, most likely you can lose a lot of money. Okay, and on the contrary, if you get in the market before or in the beginning of years of Venus, which typically return more than 20% on average, which is more than the double of the average, you will most likely be very well. Okay, so as you can see, some Mars years, 2022, Ukraine-Russia war, markets tanked. 2015, terrorism of ISIS. 2008, Lehman Brothers crash. 2001, September 11. 1994, recession. 1987, Wall Street crash. 1973, energy crisis, and so on and so on and so on. 1931, one of the worst years of the markets ever, if not the worst. So you have a lot of examples of this. In this case, we show the repetition for the Mars years, but this tends to happen also for Jupiter years, for the Moon years, for the Saturn years, and so and Venus years, which Venus is a planet of peace. So normally in Venus years there is more peace, and so the markets want peace. They sense stability and deals, and that is good for the economic environment. And that is one reason why in Venus years like 2024 there were good returns in the market. So as you can see here, 1931 Mars year, 1973 Mars year, 1987, 2001, 2008. So, and as you can see, the peak years normally coincide also with Venus years. This is not a 100% rule, because of course you might find some good years of Mars as well. There are other factors that are counted in this evaluation, because you have, for example, a ruler and a co-ruler, and sometimes the strength of the co-ruler can compensate the strength of the ruler. So we have other techniques to understand what is the ruler and co-ruler of the year. Okay, so but on average, the results are very staggering and show us that there are patterns that repeat every 7 years. Okay, so this is true for the annual perspective, but it is also true, you can also understand the climate, financial climate on a monthly perspective, okay, with transits, lunations, and retrograde planets, and so on. So here I would like to show you an example, and this example is my forecast that I showed for my dozens of students in the end of 2022 in our course of financial astrology to prepare 2023. And this was my forecast, is that the yellow arrows would be the good phases of the year, and the red arrows would be the dangerous phases of danger of a fall or significant fall. So this was the forecast based on lunations, and this was the reality. And as you can see, yellow arrow upside, down arrow, red arrow downside, yellow arrow upside, red arrow a decrease, a downside, and again upside with the yellow arrow. So it is, I believe, very clarifying to see this correlation, and this is possible using astrology and new moons and full moons and retrogradations and other types of transits. Okay, so I repeated the same thing in the year 2024. I cannot say that results were spectacular in 2025 because it was a particular complex year, astrological speaking, too many planets changing signs, too many changes of patterns. But as you can see, the correlation in this case, almost 100%. Okay, and I'd even told that I was expecting around October 2023, a dark time for mankind, a dark time kind of similar to the September 11 with some deaths or some problems. And I also posted in Facebook some months in advance that I was expecting a kind of dark event for October, like a terrorist attack or something like that. And then it happened the 7th of October and the Gaza-Israel war. Okay, so it is possible. And it is possible also to see in advance these kinds of correction of the markets. For example, this is the example 2025 that I showed previously. And as you can see, this period of the tariffs announcement coincided with both Venus and Mercury retrograde and debilitated. And this is typical movement of markets, of this pullback when many planets are retrograde, and especially these two. And my students were warned in advance in the end of the 2024 that this was most likely one of the most dangerous phases of the year, uh, with the big possibility of drops, strong drops. Okay, it is not, as you see, very difficult to understand what are these periods. And it is important to know that during retrograde periods, of course, there is an exaggeration. There is normally an exaggeration. So if there is an upside, it's exaggerated, not reflecting the real value of stocks. And most of the time when there is a very sharp drop, there is a tendency for exaggeration as well. Okay, they are normally retrograde planets associated to temporary movements, false movements, either for the good or for the bad. And knowing beforehand what are these movements can help you a lot dealing better with the emotions of the market. Okay, so as you can see, after the retrogrades, normally it's a good opportunity to buy, and this was the case. Okay, this was really the case. Before the retrogrades, a great selling opportunity. After the retrogrades, a great buying opportunity. So in reality, the truth is, as you can see with these concrete examples, it is possible to time the markets accurately and understand the flow of the markets. It is possible to do it either in an annual perspective, in a monthly perspective, or even in a weekly basis. Even in a weekly basis, because in reality, there are different energies depending on the phase of the lunar month. For example, after the new moon, on average, there is a drop of the markets. Okay, it's kind of a, um, a period of strength of the markets, the new moon, and after the new moon, normally there is a drop. Okay, so and now I will present a sixth myth where people tell that no one has ever made any accurate prediction in advance of a very emotional and predictive and unpredictable market, such as cryptocurrencies, for example. So these are particularly emotional and volatile markets. And so it is normal that people think that no one has ever predicted this in a great advance. And as you can see, as you will see, there is at least one verifiable example of forecasts for a given year, timing precisely the major bottoms of the year in advance. This forecast was made during our course to forecast 2024 in the end of 2023. And if the students had followed this plan, they would double the performance, for example, of Bitcoin from 50% to 100%, and they could make from 2 times to 5 times more returns using the same forecast to sell and buy altcoins. Okay, we see what was the example. So this was the forecast, what I thought would happen in terms of the cryptocurrency market for 2024, based on the patterns, astrological patterns of the last 15 years of Bitcoin. So there was a correlation with particular planets, and so understanding the new moons and those planets, I made kind of a drawing for the possibilities of the trends. So I believe, and I told them that around 11 March, one possible peak, then one low in April, then a higher peak around the 6th of June, and then another peak around July, but not significant, and a bottom in mid of September, or from 7 to 15 of September. So this was the forecast made in December of 2023. I have witnesses, which are my more than 50 students of this edition of the course. So this is a fact. And these are what was really the reality. The reality is that we had a top not on the 11th of March, but on the 14th of March. We had a top precisely from the 5 to 6 June. Many of my students sold their cryptos on the 6th of June, and on the 7th, the market was already tanking. Okay, so as you can see in the down part of the PowerPoint of the handout, there is a reality. And as you can see, beginning a huge increase here, even the arrows, green arrow, more steady than blue, more intense increase than the peak here. Then the drop around April. I thought the drop was around the 20th of April, the bottom, and the bottom was 1 week after that. And then the peak of 6th June, completely spotted on 6 months in advance. And then the drop, and even the other like up movements around the 3rd week of July was spotted, and then the down and the bottom in September. Okay, I thought bottom was between 7 and 15, and the bottom was on 7th of September. So as you can see, this is not a lie. This is truth. True. These are facts. I can prove you with my students. They can tell you that this was completely true. By then, we didn't believe that it could be so accurate. So many didn't act upon this because they were experimenting and testing. I cannot tell you that for 2025 that we had the same results. In 2025, we were very far from doing such an accurate forecast. And the reason for that, for cryptocurrencies, we were wrong sometimes. I must be transparent with you. And the reason is why, because the way the market sees Bitcoin and cryptocurrencies, the institutional identity of the product of the asset, Bitcoin and cryptos, is changing a lot. And so the planets that were correlated to Bitcoin in the last 15 years or 10 years seem not to be correlated anymore. But there is a new planet that emerges in this new correlation. So in 2025, there was the immersion of a new planet that was not so strongly was correlated to crypto, but not so strongly correlated to crypto as it was in this year. And so there seems to be a change of pattern of the planet more correlated to this market because of the change of the institutional adoption of crypto and Bitcoin with the ETFs and with the bankings and so on, with the banks and so on. So this is why we believe we are now more prepared because of this first year of the new pattern to understand, based on this new pattern, what could be the tendencies for the next year, because it is likely that the association with this planet will endure for some years, and then after 5, 6, 7 years, we change to another planet as the cryptos change in the view of the people. Okay, so it is important to understand that we made 2 years of very accurate predictions of the cryptocurrency market, 2023, 2024. with 1 year in advance, okay? And that we didn't have the same results in 2025 for crypto. We had a very good result, for example, for the identification of the S&P 500, what will be the result of the year, that there was still a bullish market. Many people disbelieved that 2025 would be a bullish market still for stocks. Okay. So, and other months of corrections that we identified. But in terms of crypto, not so easy to do it because of the change of pattern. But we believe now we are more prepared because of this learning experience to forecast 2025, even for crypto. Okay, so let's go to the final myth, which says that it's a kind of a conclusion of the other two myths that says that there is no correlation of the financial cycles with planetary cycles. So astrology must be nonsense. And it would be interesting to see another market beyond normal stocks or even crypto, that as markets such as the oil price also reacts incredibly well to the transits of the planets. So this is an example is that energy is correlated to the planet Mars traditionally. Okay. Also, it's true that in years of conflict in the world, which are typically years of Mars, which is the case of 2022, this chart, normally the energy prices go up, okay, because there are shortages of circuits, and countries, they kind of um, get more angry with each other, so they have uh, closed they close their relationships and their trade and their agreements. So normally the energy of prices tend to go up a lot in years of crisis, such as 1973 and 2022. But as you can see, it was a Mars year and the price of oil increased, but especially the peaks coincided with conjunction of the planet Mars in its strongest signs, which has Capricorn and Scorpio, and Capricorn and Aries, conjunct Venus and conjunct Jupiter. So the precise day of peaks was in the precise day of the conjunction of Mars with these two planets that are considered the benefic planets in astrology. So this is not a coincidence. This defies completely statistics. I come from economics. I have a background, a degree in economics. I worked in statistics for 4 years. And I assure you that this is statistically very, very compelling. Okay, this case for the coincidence that we see with specific days. It is impossible to say that statistically this is not true. Okay, there is a strong, very strong correlation between markets and astrology and precise days of planetary alignments. And this is a staggering case, a very good example. Okay, in this case, planet Mars and oil. But there are other correlations, very simple correlations to do. As I told you before, normally in periods of retrogradations of planets, there is a decrease of prices exaggerated. And if you see the top record-breaking falling months of the S&P 500 since 1970, you see that 6 out of 7 of these record-breaking months coincided with the period of Mercury retrograde. And the expected value, if there would be no correlation, would be 25%. Would be 25%. So in reality, the value is 3 times more than the expected for a Mercury retrograde period. One clear example was the COVID crash in February and March 2020, a typical Mercury retrograde in Pisces case, okay, of exaggeration of falls after the planet turns direct, a huge recovery of the markets. Okay, so this is another good example, statistically valid and true. And another simple example from this last year, 2025, we have the flash crash of the crypto market in the 10th of October. So on the 10th of October, Donald Trump made a tweet post telling that probably he would tariff China in 100%. The markets didn't like that. Financial markets, for example, the S&P went down 2% in one day, which is a lot. And the crypto market tanked a lot Also because there was market manipulation by the market makers, like the big exchange companies like Binance, that knew that they can wipe out some positions of their clients that have, for example, leverage positions if a certain price, low price, is achieved. So there was also some manipulation of the markets, and they kind of um, profited from this impulse of a drop to make the market drop even more by selling the cryptos that are not really in the power of their clients. And so the many clients have their stop loss position activated, and many people lost a lot of money. So for example, this cryptocurrency Cardano lost almost 30% in one day. Some cryptos lost 80% in one day and then recovered a little bit. But it was a historic day for the crypto market with billions of liquidations and a nightmare day. So what happened astrologically in that day? Was it possible to predict some kind of difficult event by then? And one of the ways of seeing how markets react in a daily basis is understanding that each day of the week is ruled by one planet. For example, Friday is ruled by Venus, Tuesday by Mars. And if in those days the configuration of that planet is in a big tension, there is a probability of a crash, which was the case. This was the case the only time of the year where Venus was opposing Saturn in a Venus day, and Venus in her one of their worst signs, which is the sign of Virgo. So this was one dark day for Venus in the whole year. She was also the ruler of the sun, which amplifies the significance of this opposition. And so, yes, it would be possible to identify a danger day compared to the whole days of the year, this 10th of October. The difficult part is understanding why the crypto market was so connected to Venus. Okay, that was the difficult part. But if you know that is connected to Venus, you know that is a dangerous day of the year. The likelihood of a fall would be very great. Okay, so very big. So this is another example. So in reality, we could say that markets such as stocks, gold, oil, cryptos can be highly correlated to the precise day or week with important planetary cycles. So this is the truth. Okay, so by now you already have a different idea of how astrology can be used to understand the market cycles, of how it is different to have a management of portfolio with an idea of the timing compared to not having any idea of a plan for the future. So you have an idea, structured idea of phases in the future that can be correct or incorrect, but it is better to have an idea, a plan that most of the times is correct than have no plan at all and have no idea where you are where you are. Okay, so it is a very powerful tool to if you use it with other tools of risk management or of analyzing the markets. If you combine those tools with this tool, most likely you have an even a more powerful way of managing the emotions of the market and the flows of the market. Okay, it is not perfect. Even with the best astrological experience, sometimes you don't really know how the complex combination of the markets work. For example, this year 2025, as I told you before, was extremely complex to analyze because there were too many changes of combinations of planets and too many planets changing sign. Uranus into Gemini, Neptune into Aries, Pluto was already in Aquarius, Saturn in Aries. So angles between them. So there is a lot of information to be processed in order to have a clear picture of the next year. Not easy. Sometimes some years more difficult than others, and this year of 2025 particularly difficult. So summarizing, what are the advantages of using financial astrology compared to not using? More trust, confidence, peace of mind, and clarity while investing. You have a preparation for some turning points in the future. You have a preparation. Sometimes you don't know exactly what will happen. It is difficult to know exactly what will happen, but you know that there is a tendency for a change and for what side will be the change. Okay. And that helps you a lot having more trust in the market. So it helps you have a strategy in terms of timing, either short term and long term, with a clear justification of arguments. Of course, helps reduce risks of loss and improve odds of profit. And it is a precious edge in a very competitive environment, which is the financial market. It is a war out there. It is a jungle out there. Every person in a financial market is chasing a tool such as this, is chasing a tool where then they can identify the cycles. And so this is a fabulous and so far not so known tool, but it's a fabulous tool to overcome the biggest problem of the financial markets, which is the understanding of the cycles. I hope I have showed you enough examples for you to realize that this is true. What I have showed you just in the last handouts. Okay, so probably you can make 2 to 20 times more return. Of course, you still have to have good risk management. You still must acknowledge the news. You must be reading the news even on sometimes Twitter, for example, and understanding what is happening. But you must have data from the economy. But if you combine the tools, you are more prepared for the new year and to have a better result in the end. Okay, so it gives a lot of trust, confidence, peace of mind, and it is a wonderful tool. However, I must also warn you, in the case that you choose to do this course with us, in the case that you want to do this investment, in the case you want to dive into this world, I must prepare you for psychologically, in being completely honest with you, that I must warn you that there is a price to pay in order for you to have access to more money, for example, in investments. I cannot tell you, there is an easy way for easy money or for big money without some personal growth. So if you want to face this opportunity of making more money with investments with another tool, you must realize that the universe or the divine or your angels, if you believe in them, or simply the system won't reward you if you don't make significant personal progress or personal changes. So if you think you can just not work and just relax, do nothing, put your investments and you will become rich and your life will be completely solved, all your problems, you will be wrong, most likely. Okay, from my experience of past students and myself, there is here also not only a mathematical law, but a spiritual law involved in order for you to have access to more money. Of course, you must change your beliefs about money, your family beliefs, your cultural beliefs about money in order to have access to much more money with investments. However, you must understand that even if I give you 80% of a perfect forecast, if you're not connected to your personal growth, you will be, in terms of your intuition, conducted to the 20% of the forecast that was wrong, and you might do bad decisions and you might lose money. Okay, because it's difficult to be 100% right in terms of forecast. If we have 70% of accuracy, would already be amazing. Okay, but from our experience, there is an alignment of the people who made more money with this information if they are not lazy people in terms of their personal growth and their personal development. What do I mean by personal growth? doing the things that are sometimes difficult for you and that you don't want to face. This could be, for example, dealing with your body and taking care of your body, of a personal health issue and going to a therapy. This could mean be more time present with your children and with your family or with your friends. Have more social gatherings. This could mean developing more skills in your work or in your job. This could mean changing your work or your career, or changing or moving to another country. This could mean having a kid or being a parent. This could mean getting married and accept that challenge. Or this could mean, on the opposite direction, facing a divorce and changing your life. So it depends on your personal life in this moment. But it is very important to understand that even with the best information, you still might lose money if you think you're escaping your life challenges. So you must face your life challenges. You must still grow and optimize your own talents in your career or in your job or in your company. You must still do the best out of you, even with this information. Okay. And so having this consideration in mind, this warning, now we are prepared to show you also some testimonials for our course. For example, José, business manager. It was possible to make investments with accuracy and performance never before achieved. Or Todd, that is a professional trader and investor. João's forecast, he was with us for 2 years, are unbelievably accurate and paired with appropriate risk management. The course pays for itself many times over. Or Pedro F. Tech Consultant, it was mind-blowing how astrology can be used to analyze the markets and get an impressive accuracy. Or Cecilio, entrepreneur, for the very first time of my life, I won in cryptos and very good returns. So these are, you can see in our website, fineastrology.com, many more testimonials. And you can see it on more details on fineastrology.com, or you can just email us info@fineastrology.com. But before that, let me just present the course. So the course will be addressed not only to professional investors, but also to amateur investors. So this time we will have one lecture that is more focused, the first one, in operational issues and on the market psychology and on the news cycle, for example. But we will address especially the understanding of the trends of the new year in terms of sectors, but in terms also of the general atmosphere financial of the year. And for example, the S&P 500, what could be the results or the tendencies, or what could be the months or weeks of big changes and for what direction. So we will have an idea of also the coming years. We will also have an idea based on this changing pattern of the cryptocurrencies, what could be the outcome and the patterns of terms of the trend for the next year. We will also take a look at special forecasts of special markets. For example, in 2025, we pinpointed one of the most growing sectors would be most likely quantum computing, and so it has been proved this year. And at the same time, we told that we were changing for the basic needs cycle, where assets such as gold could be more priced, and that was also the case. So we will see, and we have 7 lectures in English and 2 Q&A sessions. We also will have, for the ones that are reading this in Portuguese and are Portuguese, we will have the translated lectures given by my assistant, Patricia. I will give the English lectures, okay? And I will give the Q&A sessions that are double translation, okay? Simultaneous double translation. So we will have a final lecture of conclusions, a forecast. These lectures will be emitted live in these dates from the 7th to 27th of January 2026. You have special prizes either if you register until the 1st of December or until the 1st of January. The price will will increase as we approach the beginning of the course. So you must see what is the price in the time that you watch this video presentation. Even if you watch this presentation during 2026, even in March or in April or in the middle of the year, you still should and could buy this course because it has information for the remaining part of the year, but also for the next coming years. And you must also understand that by buying this course, you will be connected to us in a Telegram group with constant updates in the whole year. So besides the handouts and the structure of the financial cycles for the coming years and with more detail for the next year, 2026, besides the videos, presentations, the lectures, the handouts that you can print, you will also have access to these lectures for at least for 1 year. Okay, at least for 1 year you can rewatch the sessions, and uh, also you become part of a Telegram group with many updates and observations and comments about what is happening in the markets. Okay, so if you will be more than welcome if you want to join us. As I told you, even if you're watching this before the course starts, you have a special price, more cheap. But if you register after the course begins, the price could be already much higher. In any case, it is, as you can see, you will have to feel if you felt this was structured, if you felt that this had a point, that it made sense. Of course, people that are not in astrology, they might find some of this language a bit different, but I will make sure that you know the main results. So even if there will be technical parts in these lectures, my job is to make the task easier for you. So if you know astrology, that could be amazing for you. You will see astrology in a completely different way. This is applied collective astrology or applied mundane astrology that you will see in this course. So this is a highly skillful branch of astrology, but explained in a very simple way and effective way. So if you are an astrology fan, this is for you. But if you're not an astrology fan if you know nothing about planets, I will make sure that you have the main conclusions and the main ideas for you to use as you will, okay, as you feel. Because in the end, your personal this will not be financial recommendations. I mean, we will not be responsible, of course, for your decisions. This will not be financial advice. It is important to state that from the beginning. If you decide to buy a stupid meme coin with no intrinsic value beyond the speculative value based on this forecast, and if you lose money, and even if you gain money, we are not responsible for that. Okay, we cannot responsible for our portfolio management, for your risk management, um, um, and you must be very clear. You must be very clear on that. That emotions sometimes take charge when you're investing, and you must have a emotional preparation for that. We will explain that in the first sessions, but in the end, it is your decision. But you have to think if for you it's better to have this preparation in terms of the understanding of the future cycles based on what you have seen in this presentation, or if you don't need this structured idea of how the markets could unfold in the coming years and especially in the coming months. You have to decide. You can send some questions if you have them. You can send some questions to the email that I send you, info@fineastrology.com, and you're more than welcome. You're more than welcome. It will be an honor and a pleasure to help you navigate this world of financial investments in a different way, with more grounding, with seriousness, with competence, with experience, and hopefully with good results. So you're more than welcome. Thank you again.